This is the 2019 Ordinary Level Interpretations of Accounts question. So basically, this is the new topic we're going to look at. It's interpretations of accounts. It's question 5. It comes up every single year. And we're just going to start here with the Ordinary Level question. So you can follow this question on page 155 and 156 of your exam papers. So what are we given in the question? Well, unlike the previous questions we've covered, in this question we're actually given the trading profit and loss and we're given the balance sheet. So we're given all the information and we have to interpretations of accounts. We have to interpret the accounts. We have to look at what the information is and basically say how the company is doing. So our required information at the bottom, we have our part A and B. These are in every single question at higher level as well. And then obviously we have a little bit extra here at the bottom. Our first part here is part A. What we're doing is we're given this information and we have to find the formula for each one of these that are given, and basically plug in information from the question, fill out the formula and get an answer to 2 decimal places where that's appropriate. So the first formula I'm asked to get is the gross profit margin. So the gross profit margin formula is as such: gross profit divided by sales multiplied by 100/1 equals percent. So that's the formula. You will eventually have to learn off these formulas. There's about 16 of them there. But again, this question comes up every single year. My gross profit is in the question here. It's unknown, question marks. My sales given in the question, 650,000 credit sales. I'm given no other information about sales. So what do? I find out my gross profit. Well, it's the difference between my sales minus my cost of sales is my gross profit. So 650,000 minus 345,000 is 305,000. My sales, which is down here, is going to be 650,000. I multiply by 100/1 and I get my percent. My gross profit margin is 46.92%. Again, I'm rounding that up to 2 decimal places. The next thing I'm asked to do is my asset test ratio. So that is the second part of the question, is the asset test ratio. So again, I have my formula for this here. This one's a little different. So current assets minus closing stock is to current liabilities. This is a ratio. So an example of a ratio answer would be 2:1 or 3:1. So my asset test ratio is my current assets, which I'll find in my balance sheet. Current assets, 88,000, minus closing stock. Closing stock, where am I going to find it? It's up here in my trading profit and loss. Closing stock end of the year, 30,000. Is to current liabilities. Where do I find my current liabilities? Again, if I look in the balance sheet, creditors falling due within 1 year, that's my current liabilities. I'm only given 33,000. So what do? Putting in the information, 88,000 is my current assets, 30,000 is my closing stock, given up here. I'm going to take that away. 33,000 is my current liabilities. So just literally the next line is just sorting it out. 58,000 is to 33,000. How did I get my final answer? Well, if this is a ratio, I'm going to show how much times the first part is to the second part. How do I get that? Well, 58,000 divided by 33,000 is 1.76, and then 33,000 divided by 33,000 is 1. Basically, you divide by the second one. Divide both of them by the second one. If this was 10,000 and this was 1,000, I'd just do 10,000 divided by 1,000 is to 1,000. 10 is to 1. So that's how ratio works. You just divide it by the second one, because you're showing how many times the first one goes into the second one. So it goes in 1.76 times. So that's my answer. 1.76 is to 1. Again, it has to be written in that format. Third thing I'm asked to do is period of credit received from creditors. So basically, how long am I taking to pay back my creditors and the people I owe money to. Again, there's a formula here. Formula for this one is my creditors divided by my credit purchases multiplied by 365 over 1 equals days. Again, I'm looking at my creditors and I'm saying, okay, I bought some goods off these suppliers. I bought the goods in credit. How many days does it take to pay them back? So my creditors is 33,000 and my credit purchases, if I look at my P&L, is 342,000. Again, multiplied by 365 divided by 1 equals days. So plugging it in here, trade creditors 33,000, credit purchases 342,000. Again, that was given up here. It's my credit purchases. Multiplied by 365, 1 is 35.22 days. Has to be two decimal places because that's what we're asked to get, and the answer is in days. Again, the unit for the answer is very important. There is about 16 formulas here, and you will see them again and again and again. It's very important you know them off by heart. The first part of these questions are worth 50 marks. If you know the formulas off by heart, this thing is easy. It's just putting in figures. Even at higher level, it's relatively easy, and it's generally it's not very common to get 50 out of 50, but if you put in the work, you get 50 out of 50, which is obviously a very good thing. Next thing, rate of stock turnover. So that's the fourth thing. It's the last thing for part A that we're required to get. Basically, how many times do I need to buy my stock in a year? So if I'm selling 650,000, how many times do I need to go about purchasing my new stock in order to fulfill those sales? So first thing we have here is our formula. So our cost of sales divided by our average stock equals times. So my cost of sales, again given in the question, is 345,000, and my average stock, we're going to have to work out average stock. So cost of sales divided by average stock equals times. So my answer is in times. Again, we don't know what average stock is. There is nothing here that tells us what average stock is, but it is a formula in itself. So my cost of sales was given at 345,000, as we can see up here. But my cost of sales, I'm going to have to work out. So my cost of sales formula is as such. We need to find the my average stock formula, because I don't know average stock. My average stock formula is opening stock plus closing stock divided by 2, and my answer is in euros. So my opening stock plus my closing stock divided by 2. Again, looking at the question. Opening stock, closing stock, add them together, divided by 2. Nice and easy. I'm literally just filling it in. As long as you know the formulas, this is quite easy. Opening stock is 33,000, closing stock is 30,000, divided by 2 is 31,000. Now that's my answer for what? That's my answer for average stock, which was my missing figure up here. So 345,000 was my cost of sales. My average stock we now know to be 31,500, and my answer is going to be in times. So what do we think we do? Now go back to find the rate of stock turnover, which is what I was asked to do. I was already given the formula, 345,000 divided by average stock. We worked out average stock here to be 31,500. So 345,000 divided by 31,500 is 10.95 times.